To make the most of your portfolio, you'll want to use limit and stop orders so your portfolio reacts automatically when the market moves. This tutorial will show you how to use these orders and how they work in this system. Limit orders are one of the order types you can use on this trading platform. They're used to maximize profit, but using a limit order will not protect you against losses. You can use both limit orders to buy and sell stocks. You can use a limit order to buy a stock when it's cheap. You'll set your limit price below the market price, and once the market price goes below your limit price, your order will execute. Let's look at an example. In this example, we're going to buy a stock with a limit price of $20. So you can see, as the stock price is moving throughout the day, nothing happens. But as soon as the stock price goes below our limit price, our order will execute. To use a limit buy order, first go to the trading page, enter the symbol you want to purchase and the quantity you want to buy. Next, change your order type to a limit order. Since I'm using a limit order, I want to enter a current price below the current market price. So if I see the price here is 9.65, I want to put my limit order at 9.50. That way, if the stock price drops to 9.50 today, my order will execute. I'll click Preview, which updates my estimated order cost to reflect my target price, and click Confirm to place my order. You can also use a limit order to sell a stock. In this case, you want to sell a stock as soon as you think the price has gone as high as you think it will. That's where you'll set your limit price, above the current market price. This way you can try to maximize your profit. Let's take a look at an example. In this case, we're going to use a limit sell order set to $27. This is for a stock we already own. We see its price is moving up and down, but we'll wait until the price moves up above our limit price and the order will execute, getting us the highest profit that we set our limit for. To use a limit sell order, go back to the trading page and change your action to sell. Then, just like before, put the symbol and the quantity you want to sell and change the order type to limit order. In this case, I'm going to want to set my limit price above the current market price because I want to maximize my profit. So in this case, since the current price is 6.16, I'll put 6.25. I'll next preview my order, which updates my estimated cost based on my limit price, and click Confirm to place my order. The opposite of a limit order is a stop order. These are designed to minimize loss. But like a stop order won't protect you against any losses, a stop order can make you miss out on some potential gains. For a stop buy order, you want to buy a stock as soon as the price starts to go up because you don't want to miss out on the stock's increase in price. This means you put your stop price above the current market price. Let's look at an example. In this case, we're putting in place a stop buy price at $25. This means when the stock's price starts rising, nothing will happen until it hits $25. When it does, our order will immediately execute, and we'll make sure we buy the stock before we miss out on any future gains. Stop orders work in the exact opposite direction of a limit order. So in this case, when I want to use a stop order, again, I type the symbol I want to purchase and the quantity I want to buy, and I'll change my order type to a stop order. Now, for a stop order, for a stop buy order, I want to put my limit price above the current market price. So I can see it's currently $1,232. So I want to set my stop price to $1,240. That way, if the price keeps going up to date, it'll buy the stock for me. Press Preview and confirm my order to place it. You can also put in a stop sell order. This means you want to sell a stock as soon as the price starts to fall below a certain point. You'll put your stop price below the current market price. Here's an example. In this case, we're using a stop price of $16. This means as the stock's price that we're holding is trading throughout the day, nothing will happen. But if the stock's price starts to fall below $16, our order will execute and the stock will sell automatically. A trailing stop order is a new kind of stop order. This tries to combine the profit maximization of a limit order along with the risk aversion of a stop order. Instead of having a set limit price, it'll lock in your gains as the price goes up. You can set a trailing stop order by a dollar amount or as a percentage of the value of what you're trying to buy. Let's look at an example. We'll use a $5 trailing stop order on a stock with a market price starting at $25. As the stock price falls, our limit price does not fall with it. But as soon as the stock price starts to go up, our limit price will start to go with that. This means that you can't lose more money with your stop order, but as soon as the stock price falls below your trailing stop amount, your order will execute. Like with the other limit orders, first choose your action, buy or sell, and then enter the symbol. Enter your quantity for the number of shares you want to purchase, and change your order type to trailing stop order. In this case, you can have a trailing stop by a dollar amount or as a percentage. So for this case, I want to buy this stock if the price raises more than 5% today. That means even if it drops 10%, if it goes back up 5%, I will buy the stock at that limit price. I click Preview and confirm my order to place it in the system. There are 3 types of order terms. Good till day, which means this order will expire at the end of the current trading day. If you place this order after the market closes, it will expire at the end of the next trading day. Good till canceled means that this order will stay open until you manually cancel it or it executes. And good till date means that this order will stay open until it executes or the date that you specify has passed. You can use any of the different order terms with any of the different order types except for market order. Market orders will always expire at the end of day. So in this case, I'll enter my symbol, I'll enter my quantity, and once I change my order type to a limit order, stop order, or trailing stop order, I will also see my order term. Good till day means that it's going to stay open until the end of today. If it has not filled by the time the market closes today, this order will cancel. If I place this order while the markets are closed, like if I set it at 5 p.m. Eastern Time, then this order will wait until the next day, and then it'll try to execute all day tomorrow and then cancel at the end of tomorrow. Good till cancel means this order will sit open until either I cancel it or the conditions fulfill. So if you're using trailing stop orders that you want to have for a long term, you'll probably use a good till cancel order type. Good till date is a good till date. You can actually get a date picker where you choose where exactly you want this order to end. So if this date comes and goes and your order hasn't filled, then your order will cancel.